Hello, this is jibbytrades, and I'm going to show you how I day trade. So, little guide here. This is not how to day trade. I'm going to summarize this a lot. I'm going to compact this a lot. I'm basically just going to show you what I do to trade. There's a million different ways to trade, but I'm going to show you what I usually do in my setup that I use and the strategy and my risk management and stuff like that. I don't know how long this video is going to be, but I haven't made a video in a while, so we're going to do it. So first, there's a few things that we need to know here, and I'm going to go into Microsoft Paint actually, because I just want to see what's going on here. Okay. So, first things first, what is trading? Now you might be, you know what? I actually don't want to use this app. I don't want to use this app. Hold on. No, I don't want to account. Stop. All right. We're switching to whiteboard. What is trading? All right. So, basically, I mean, do I even need to explain this? You're basically just predicting whether price in a given stock or ETF or, index or, you know, you're basically trying to predict whether price is going to go up like this or down like this. And if you know nothing about trading, you can actually make money on both. So you can make money on both. People think that if it's going down, you're automatically losing money. That's not true. You can make money on a stock going up or down. And why is that? Well, when you buy a stock, you're basically predicting for it to go up, and you will lose money if it goes down. When you sell a stock, you are predicting, or not a stock, but when you sell something, you're predicting for it to go down, and you will lose money if it goes up. So that's what that is. So you can create a sell order, or you can create a buy order, and depending on that, it's basically determines whether you're going to make or lose money depending on which way it goes. Now, there's a bunch of different strategies here. There's strategies that are specifically made for selling. There's strategies that are made for selling, strategies that are made for buying, which are called longs. These are called shorts when you're predicting for it to go down, longs when predicting for it to go up. So, I'm just going to set out some basic things. We're just going to throw out a few things. This is price going up, right? This is called an uptrend. As you can see, we got a low, got a high, got a higher low, higher high, higher low, higher high. You can see, even though it's a little, it's going up. Alternatively, this is a downtrend. High, low, lower high, lower low, lower high, lower low. It's going down. Boom. Down. All right. I'm just gonna throw out some basic terms here. Just, you don't need to know them for the way that I trade, but you should know them if you were trading. If you don't know these and you're trying to day trade, that's probably bad. Learn them. How do I make this thicker? There we go. All right. So we got this uptrend, and let's say we're learning about break of structure right here. So break of structure basically means that the trend starts going, sure, in the opposite direction. So this is when a low or a high breaks past a previous point. So you can see here, low, high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. You can see here it cuts below, it breaks the structure, it breaks the trend that we've been seeing throughout here. This one's lower. So now we've broken structure, we're in a downtrend now. Oh, really? So hopefully this is kind of easy to see here. You know, I'll try to make it a little bit more obvious. So right when we break that, we are now in a downtrend. All right, gotten that out of the way. I'm going to talk about another really important thing that my strategy is completely based off of, and what most strategies are based off of, and is it's the easiest thing, liquidity. It is the easiest thing to make a strategy off of. It's the easiest way to trade, and if you master liquidity, you are set. Liquidity is simply where there are high volumes of buy or sell orders. So we got our trend here. Liquidity lies at highs and lows here. We have buying liquidity here, so there's a bunch of orders here that are being filled and causing the price to jump up. Similarly, there are a bunch of sell orders up here, and when these get filled, the price is going to push down. Now, there's another thing called a liquidity sweep, which is very popular and a lot of traders should know. Is basically when you have this, all right, it's going back up. This, imagine an invisible line here. When price comes back and pushes above this previous high here, this is sweeping out liquidity here. People are placing a bunch of sell orders right here, right when this high is broken above. When price gets up here and all these orders get filled, it is going to most likely get rejected. You know, it is going to get filled and it is going to go down, down, down. And once again, alternatively, when price comes back down to this previous low, a bunch of buy orders are resting here. And this is going to get filled and price is going to bounce and it's going to go up. So mastering liquidity and liquidity sweeps is very helpful. That's all I really use for my trading strategy. And all right, I'm just going to break this out real quick. Ready? You can compliment my beautiful drawing skills. I don't know why the green is thicker. It's kind of making me angry now that I think about it. I really don't like that it's thicker. All right, this is a bullish or green candle. And this is a bearish or red candle. This is how this is laid out, right? And you need to understand these. These are the things we use. This is the range that price. This is a range. How do I word this? This is a range of price in a certain amount of time. So let's say this is let's say you're on the 1 minute time frame. That means each one of these candles is 1 minute worth of price action. 1 minute, 1 minute, 1 minute. Now, I'm going to lay this out here. On a bullish or green candle or a good candle, this is where price opens. This is at the lowest point it's reached in that minute. This is the highest point it's reached in that minute. And this is where it closes. So it can open right here. And at any point during this 1 minute period, it can come all the way down here. Let's say, we're We're at 40. We're 40 seconds in. It comes up here, and then at the end of the minute, it comes here and it closes for the minute, and then it makes a new candle. For the bearish or red candle, it's the opposite. So it opens right here. This is the highest point it's gotten. This is the lowest point it's gotten, and it closes right here before making a new candle. This means the price has gone down in that 1 minute time frame. All right, you understand candles. I'm really trying to condense this down here so I can get to the charts. Can I clear this? How do I clear this? I wouldn't say this is the most effective method. You know what? Sure. All right. Let's go to charts. So, we're on TradingView here, and I use TradingView to trade. I'm connected to a Trade08 account, which is connected to Lucid trading account. And I'm just going to show you a few trades and what setup I use here. So the setup I use is the 8 a.m. to 8:15 a.m. orb, or opening range breakout. That's what ORB stands for. So basically, I go to at the start of every day, right, at like 9 a.m. I go to the 15-minute time frame. I go back in time to the 8 to the 8 to 8:15 candle right here. So this is the 8 to 8:15 candle right here, because this is 8 o'clock. I make a little box marking the high and low of that candle. I just set up my little range here. Make sure the midpoint is checked here. I have the midpoint checked out with this dotted line here. So this is the middle of the candle. It's middle of the range. Go back to the 1 minute. So this green block is the New York AM session. So market opens at 9:30. That's what this red dotted line is for. So market opens, and here is one of the strategies. There's 3 parts of my strategy. So here's one. I wait for price to push up to this midpoint, and there's a good chance that it's going to get rejected off of that midpoint, and it's going to start going the other way. It's going to reverse off that midpoint. The reason why this is because the 8 to 8:15 range is where a lot of volume starts kicking in. It's where a lot of people start placing their orders, and it's just where a lot of volume starts during the day. So as you can see here, this is the trade I took today, and you can see market opens, price pushes up. In this case, the blue is obviously my bullish or green candles, and the white is my bad candles, my red candles. It pushes up, it hits this midpoint. I wait for a confirmation candle, meaning I can't just enter right off the midpoint because I don't know where it's going to go from there. I need to wait for a confirmation candle. I need to wait for price to go back down below and close under the midpoint to confirm that price is actually about to reverse. So as you can see here, this is my position. I entered right at the close of this candle, and I set my stop at 6 points here. And for about a 1-to-2 ratio, I got about 10 points of profit, which is about $400 on the account. And you can see it did actually reverse here. So this is a weird setup because I don't know. This is a weird setup. It wasn't very clear. I probably shouldn't have taken this trade, but as you can see, it did obviously go down once it reached this range here. And if we go on a 5-minute time frame, that becomes way more apparent here. So it goes up, boom. All right. Let's check yesterday. All right, so this is interesting because there's actually 2 setups here, and then they both worked out. So these lines here show the high and lows of the session. So this is London session. So along with taking reversals off of the midpoint of the 8 to 8:15 range, I also take rejections off of session highs and bounces off of session lows. So this red line is this London high here, London session high. We're on the 1 minute time frame. You can see market opens right here. I don't know why this line isn't here, but oh, it is there. It's just really hard to see. All right, got it. Market opens here at 9:30. Pushes down a little bit. It comes up. I'm looking for a sell, a rejection to the downside off of this London high, and you can see we do get a little bit of that. It's not too large of a. It's more like a little bearish retrace in this uptrend, but it's enough for me to be able to feel confident in taking a trade here. So I take a trade. It actually didn't touch, but apparently I took it anyway. So you can see here it touched this this high. It closed below, which is my confirmation that it is gonna, sellers are taking control, and it's about to go down. I place a trade at the open of this candle here, about a 5-point stop, and I get another 10 points. 1 to 2 risk to reward ratio is usually what I aim for, and that's $400 right there. And of course, you can set your contract sizes, your lot sizes, basically how much you're risking per point. Mine is 8 minis or 8 micros, which is about $40 per point. So you can see 10 times 4 or 10 times 40 is 400. So I made $400. And it's funny though. If we go down here, I marked out the range anyway. Later in the day at 11, look at this. My setup worked again. It hit this midpoint, and I could have easily taken a trade here off of this orb, and I could have gotten a 1 to 5 RR if I wanted to, and that would have played out nicely. So yeah, but I didn't take that, but it just goes to show that it would have worked anyway. Let's go to the day before that. All right, so this is previously they were reversal setups where we were predicting price to go the opposite way. Now this is a continuation setup where we're predicting for price to go the way it's already going. So you can see here, this is 9:30. This is a lunch high, which I usually don't use. There was actually a previous. Where was that? On my phone, it shows a previous. It shows a previous New York PM high. I think it just got erased. Can I change the settings? Maybe not. I don't know why it's not showing, but that's fine. Anyway, I'll show you on my phone. I don't know if you can see that, but there's a little purple line. Anyway, I don't know. Just imagine there's a line here, and that this is a New York PM session high. So it passes this PM session high, and it does not immediately reverse. As you can see, it closes above, it keeps going. So what I do is I just take a long. I'm predicting for price to go up because you can see we got no confirmation that it's going to reverse. There's no proof that this is going to reverse and start going back down. So I'm like, okay, this is probably going to keep going back up. I take a trade here in the middle of the candle. I target 10 points. I, just barely get this off for another $400. And I'm very close to passing my account. I'm only on like a 25K eval lucid trading. So that's just a few trades that I've taken the past few days. It works. And the opposite for rejection is just bouncing where we're bouncing off a low. It's really not that hard. Basically, all I'm saying is that it just takes some practice, but once you get it, I don't even know. This video isn't even trying to tell you how to trade. I'm just kind of showing my friends like what my thought process is for a couple of my friends who want to try to trade. I'm making this video for them. If you're not my friend, then maybe you can learn something from this too. But yeah. Thanks for watching. I will update you. My next video might be when I pass my account, which is hopefully soon. I'm kind of close. So I will update you guys on my journey. I post trades on my story, on my Instagram story a lot. Not that y'all can see that, but you know, it's hard because I'm also like I'm balancing a lot of things. I'm dropping an album next year. Anyway, yeah. All right. Thank you for watching. This has been Jibby Trades signing off.